Hi, my name is Sol An. I'm a senior investment analyst from Mirae Asset. Today, I'll talk about first half review and second half outlook of China consumer market. China's consumption was weak due to the pandemic in the first half of 2022. Consumption initially showed a decent recovery in the first 2 months of the year until the resurgence of Omicron in March. Retail sales slowed down sharply by declining -11% year-over-year in April with the lockdowns in key cities. The situation improved sequentially in May, with retail sales declining by 6.7% year-over-year and improved further in June with plus 3.1% year-over-year growth with an earlier than expected reopening. E-commerce was also impacted in April during the lockdowns due to supply chain and logistics disruptions. Total online physical retail sales declined by 5% year-over-year in April, but improved in May to plus 7% year-over-year. The 618 shopping festival sales turned out better than the market expected, with the GMV on all platforms growing plus 20% year-over-year. While the dynamic zero-COVID policy will stay for a while, it is unlikely that we'll see another citywide lockdown as in Shanghai earlier this year. Consumer staples were more defensive than discretionary and services sectors amid lockdowns in the first half of this year. Despite weak consumption, the premiumization trend remains the mainstream in China, as affluent consumers are generally under less financial pressure than the lower class. The premium segment has been growing faster than the value segment across different categories. For example, China Resources beer's volume declined by 0.7% in the first half, but sales grew plus 7% thanks to price hikes, but also more importantly, through sales mix improvement. The management expects their premium segment to show a 20% CAGR in the next 5 years. A similar trend has been seen in home appliance industry as well. As one of the largest home appliance platforms, JD saw high-end appliance sales surging nearly 5-fold compared to a year ago during the 618 festival, but overall sales growth was only 10% year-over-year during the same period. In addition, super premium spirits continued to show resilient demand, with Guizhou Maotai sales and profit growing 17% and 21% respectively in the first half of 2022. The management guided revenue growth of 15% year-over-year for the full year in FY22, and so far sales have been trending better than the guidance. Guoqiao has been a strong theme since last year, particularly in the sportswear industry after the Xinjiang cotton issue. Local brands continued to gain consumer attraction this year in various consumer sectors such as sportswear, cosmetics, and electric vehicles. Sales of Li-Ning and Anta grew faster than international brands like Nike and Adidas. While overall sportswear sales were impacted amid lockdowns in second quarter 2022, local brands were generally more defensive and kept gaining consumer attraction. Li-Ning's sales grew plus 22% and earnings grew 12% year-over-year, again beating the market expectation in the first half 2022. In addition, there are rising local brands in cosmetics, albeit most are still in the mass market segment rather than premium. For example, Proya was ranked number 1 among Chinese cosmetics brands on Tmall during the 618 festival and has continued to beat market expectation this year with 39% year-over-year sales growth in the first quarter 2022. The company maintained such growth even in the second quarter despite the COVID disruptions and is expected to have between 25 to 35% year-over-year sales growth in second quarter 2022. The company's core Proya brand ranked number 5 among total cosmetics on Tmall with a GMV growth of 133% year-over-year during the 618 festival. Moreover, local brands are gaining a greater share of China's electric vehicle market. EV sales of BYD, GAC Aion, Geely, and new startups have grown multiple times compared to a year ago in the first half of 2022, despite the lockdown in Shanghai and the price hike at the beginning of the year. In the past, the top 3 Chinese auto brands by market share are all foreign joint ventures like JVs of Volkswagen and GM. But this has changed since 2021 when Geely became number 3, and in the first half of this year, BYD and Chang'an ranked top 2 and 3 by market share in China. Overall, EV sales are expected to be resilient with rising EV penetration in China on the back of the government's policy support. We expect China's overall consumption to have a gradual recovery in the second half of this year. April was likely to be the bottom with the citywide lockdowns, which we do not expect to happen again, albeit the zero-COVID policy is to stay for a while. Consumption slowed down in the second half of 2021 due to the resurgence of Delta, and thus the base is low. More importantly, China will likely focus more on economic growth, especially after 20th Party Congress in October or November, and may announce more meaningful stimulus policies to boost domestic consumption. Overall, we are more positive on leading local consumer brands, particularly discretionary and service companies severely impacted by zero-COVID policy in the past year. Thanks for watching.